Hello from Berlin, Germany, everyone. Welcome to today's webinar. That's me to the left here, Chris Lassen, and then we have Harry, also known as Fat Tails or Market Lizard, to the right. And chances are that many of you already have one of Harry's indicators installed on your computer. He's programmed some of the most downloaded indicators for the NinjaTrader platform, both for NinjaTrader 7 and NinjaTrader 8. As for myself, I previously ran a company that focused on sentiment analysis, applying concepts from behavioral finance and looking at how emotions and psychology influence investment decisions. Today we have about 30 minutes presentation, so not a whole lot of time. So I'll just do a quick introduction and overview as to what we offer to start off here. First, we have an indicator spotlight newsletter that you can subscribe to free of charge. About once a month, we feature one of our library indicators with information on a general concept from technical analysis, how you can use that in a trading scenario, along with a free download of the indicator itself. And as for our indicator library, if you're just starting out, this is a place where you can find and explore a wide range of techniques for technical analysis. A lot of categories in here: momentum, price action, volatility, volume, trailing stops, trend filters, you name it. There are some 130 indicators available now, and even if you're an experienced trader, chances are that you'll find some pretty useful tools here, and that's all available for a one-time flat fee of $150, and that's for all of the indicators, not for each single indicator. So pretty good deal there. Finally, we have our premium suite. These include our professional session tools, as well as a couple of flagship tools for entry timing. And today I'll focus on one of our most popular session tools, the VWAP package, how you can use that in multiple time frames. Basically, it defines a price action zone where institutional investors are likely to participate, and that can be used to identify momentum and early trend retracement setups. We'll then have a look at how to define your risks, so the stop loss for those positions, and then discuss how the overnight range can help us define some profit targets. So there are two main reasons why institutional traders use the VWAP. First, it's a price benchmark used to control execution costs. Institutional traders do not want to move the markets as they enter large positions, so they have to find an area where the majority of the day or the week or the month's transactions are likely to occur. And statistically, 70% of all transactions during the session take place within one standard deviation of the VWAP. So that's referred to as fair value. So institutional traders are looking to execute as close as possible to the VWAP, where they'll find plenty of supply and demand. And then not to forget, the VWAP is also a factor in performance reviews. So good execution can be objectively measured by standard deviations from the VWAP. And that means that better execution than the VWAP will earn them a higher bonus, which of course is something that they're motivated by. And this is what the daily VWAP looks like. By default, the daily VWAP is anchored at the full session start of the day, and it then plots the volume weighted arithmetical mean of all transactions that take place during the daily session. And prices for every transaction during the day are added and divided by the total contracts traded during that time. And this here is a somewhat atypical VWAP chart, NASDAQ in a 5-minute chart of at the start of this week on Monday. And I've chosen this particular session to point out some things in a higher time frame VWAP chart a little bit later on, so stay tuned for that. The daily VWAP can also be anchored at the start of the regular session here. See the regular open here. And we've zoomed in a little bit from the previous screenshot. With this version, you can also choose a custom starting point. So the starting point of the pre-session here. And fair value are simply prices that are within one standard deviation of the VWAP, as I mentioned. And because institutional traders are looking to execute within that area, we can use that information to identify setups that are likely to see some traction or some movement. So the idea is to look for retracements like this that come back into the VWAP value area, going from inside towards the outer standard deviation bands. Once the prices move towards the outer standard deviation bands, institutional traders are likely to take a step back. And so we're likely to see rebalancing in those situations. This is obviously an overbought scenario that can be used as exit points for directional trades. So towards the end of the presentation here, we'll also have a look at how we determine VWAP value and overbought and oversold in higher time frames. But for now, let's take a step back again to the daily VWAP anchored at the default full session here. We move to a 15-minute chart here of the NASDAQ to show the prior day VWAP, which is located here, and the value area low and the value area high of yesterday. So those are simply the standard deviation, first standard deviation bands of yesterday. And some of the best short-term setups are found when prices move out of the previous day's value area. Following the regular open here, we saw the market shoot up to the value area high and testing this for resistance and then breaking out of that area. And those are the types of scenarios that we'll look at today. But also if the market is trading out of value and then failing to follow through, which is what we saw here just prior to the regular open, we might be looking at good momentum opportunities. Our daily VWAP also plots the VWAP levels set 2 and 3 days ago. So previous VWAP levels are important key support and resistance levels. So a good idea to be aware of where they are located. Here we see the pre-session action ending in a test of support at the VWAP level from 3 days ago. And then again at the open, we shot through here the current day VWAP and the prior day VWAP up to a test of resistance here at the VWAP 2 days ago and the value area high before the move continued, as we see here. So coming back to the institutional perspective, some of these large positions will take days to fill. So it's easy to imagine how these prior VWAP levels can be used as opportunities to get in or out of trades. And just to make clear where the previous levels originate from, you see here that it's simply plotting where the VWAP stopped plotting at the previous session here, at the session 2 days ago, and at the session 3 days ago. So it's just taking a note of those levels, and we see a couple of instances here where it's support and resistance throughout the sessions here. Next, we'll have a look at how to identify trend setups using one of our tools for entry timing, specifically the zero lag oscillator together with the VWAP. the zero lag oscillator was developed to identify momentum and early trend retracements, identifying setups where there's a trend change or a short-term oversold or overbought into a new and emerging trend. What we see here is the zero lag oscillator, also a 5-minute chart from Monday, NASDAQ futures again, with the daily VWAP. For momentum setups, we look for a decisive cross of the zero line, taking out the high and the low of the most recent consolidation area. See here, this is setting a new high when compared to the most recent look back period. And the zero lag oscillator momentum signal also ensures that the bar has an appropriate range, so it's not enough to just limp across the zero line here. And as we see here, and this is again a situation where the market just previously broke out of the value area low, but failed to follow through on that, so giving us an early signal of the trend change here. Next, we see some white bars here as we're cutting into the new trend. And this shows us a short-term oversold in the new trend and indicates a potential retracement setup. Once price action shows us that buyers are taking advantage of these short-term lower prices, we get a key retracement signal. The K here, of course, stands for key retracement. So that is the first retracement into the new emerging trend. Later on, we see a secondary retracement signal that's marked with an R in order to distinguish it from the key retracement, which is statistically the more favorable probability. The stop loss for these signals are located at a few ticks below the setup bar or the signal bar, whichever has the lowest low. And the stop for momentum signals here can be set right below the signal bar or below the low of the prior consolidation area, which of course would be translating into more risk. So here's the short scenario from the same session during the overnight. The histogram moved below the zero line, but the bar that breaks the consolidation here is much too large to qualify as a momentum signal. So there are two range requirements. It has to be at a certain range. It can't be too small range, but it can also not be too large, because that's when you see this classical retracements back. After a massive move like this, there is an immediate reaction to that, and we get a key retracement signal here. We see these yellow bars. They indicate short-term overbought, and the stop for these short signals are set just above the high of the setup bar or the signal bar, whichever is the highest. Alternatively, you can align it to these key support resistance levels, which in this case made a whole lot of sense. Later on, we see a failed secondary retracement signal here. But as you see, both of them occur within the prior day value area. So those are not signals that I would want to take. This one is outside the value area, so within the short bias, but it's outside this current VWAP value area, whereas this one that we talked about just in the previous slide is within the current day value and it's just breaking above the value area high, which be qualifying for a entry signal. So let's talk a little bit about profit targets. I like to have a look at the overnight range because it's the most recent high and low levels. Most major future markets are traded around the clock these days, of course, and the highs and the lows of the night session set the tone for much of the collective reasoning and psychology in the markets. The price levels from the Asian and the European sessions will often work as important support resistance levels during the US regular session. So you should be able to access those price points on your charts. And then the expansion bands for this range also work as reliable profit targets. And coming up here, I'll show a few examples of how that plays out. Again, Monday's session here of Nasdaq's future in a 5-minute chart. The overnight high was set right at the open of the evening session, whereas the low came in just before the regular open. This is a fairly representative image of what goes on in global markets, where the Asian and the European traders will take the market in one direction, and then the local US traders wake up and go to work saying, hey, hold on a minute. Yesterday's regular high and close levels were up here, so let's trade back to price level that we're familiar with and take it from there. So in this situation, we had a secondary retracement set up following a break of the prior VWAP value area high. The key retracement here, as you see, was just below the value area high. So the first logical target was the yesterday's regular high level here for a 1-to-1 risk reward ratio. And trading a 2-lot, the second target would be the pre-session high. Alternatively, the second standard deviation band of the current day VWAP. Now, this chart doesn't give us much opportunity to review the overnight extension band, so let's just have a quick look at another example where those come into play. This is a 15-minute chart of the Euro futures contract from Tuesday. And what we see here is a breakout from the pre-session low right after the regular open. So we have the 50, the 100, and the 200% extensions. You can, of course, choose your own levels here. The 50% expansion equals half of this range. The 100% expansion equals this range. And the 200 is double this range. This is the same setup with the zero lag oscillator and the VWAP added to the chart. So after the regular open, we see a retracement signal plotting just as the price action is breaking out from the prior day value area low. And we also see that price moves from inside the current value area here. Of course, in this scenario, we're already sitting pretty much here at the prior, the overnight low, so we can't use that as a target. Also, the VWAP bands here are quite contracted because of the narrow overnight range, so prices move outside the outer standard deviation bands fairly quickly. So it's in situations like that that the overnight expansion bands come in quite handy, because they give us a clear measure of how far the move might go. It's just based on a objective price benchmark here, which is the overnight low and high levels, and the expansion bands of those of that range. All right, so to round off the main presentation here today, we'll look at the higher time frame VWAPs, specifically the weekly and monthly VWAPs. The session start for these VWAP calculations is the start of the week and the start of the month. Therefore, at the start of the week or month, these calculations will be the same as the daily VWAP. And so to create a feasible reading, we've created a rolling VWAP that will enable you to create continually weekly and monthly VWAP calculations. So this is NASDAQ in a 30-minute chart with last week's VWAP and this week's reading, which is anchored here at Monday. So this is this week's and this is this week's, and you see that this weekly VWAP on Monday is the same as the daily VWAP because they're anchored at the exact same starting point. And we see here that the overnight here dipped right below prior week's VWAP and then shot back up over the weekly value area high. Coincidentally, this is exactly what happened last Monday too. So here a quick dip below the prior week's VWAP and then shooting up above the value area high. You see here also the weekly VWAP comes with these mid bands. We have the 0.5, the 1.5, and the 2.5 here. Throughout the weekly session, we often see these levels work as dynamic support and resistance levels. They're particularly useful for larger timeframe VWAPs, where the regular standard deviation bands are generally far apart from one another. So you see here how the 1.5 worked as resistance here towards last week, and here support at the 0.5, whereas the regular VWAP bands towards the end of the week were quite far apart. We also see how this VWAP weekly reading can help us determine the overall trend, value area, and oversold and overbought scenarios. Still, for the conventional weekly VWAP, you will have to wait until at least the second day in the weekly session here in order for it to be significantly different from a daily VWAP. So by using a rolling VWAP, a period of 5 days here, we can create a moving weekly calculation. So the rolling VWAP is not anchored at the beginning of the week, but is taking data from the previous session, moving it forwards. So you'll therefore have an accurate reading at the outset of the week. So here we have a weekly VWAP combined with the conventional prior weekly VWAP reading. We see a nice confluence here between the rolling VWAP and the prior VWAP, weekly VWAP level here, as well as over here. So some good bonuses being made here and here with better execution than the rolling monthly, rolling weekly VWAP. Pretty much the same concept here for the monthly VWAP. This is NASDAQ again in a 4-hour chart, now anchored at the start of the month. We see that the month started above the prior value area high, and that the move has continued in an upwards trend, oscillating between the 0.5 and the second standard deviation several times here as support and resistance. So I think you see the power really of combining the VWAP in multiple timeframes to identify the overall trend, of course, here, the value areas, the overbought We don't really have much oversold in this example, but ultimately finding good setups based on multiple timeframes. But again, for the conventional monthly VWAP, you will have to wait a week or so in order for this to be different than the weekly VWAP. So by using a rolling VWAP period of 21 days, we can create a moving monthly calculation. Again, the rolling VWAP is not anchored at the beginning of the month session, but just taking the data from the previous session, moving it forwards so that we can have a monthly reading here at the outset of this month. This is kind of a funny chart. There's not much going on here except a very stable channel here between the 1.5 standard deviation and the second standard deviation for support and resistance. But I think you see the power here of combining rolling VWAPs and the traditional value readings from the prior month, week, and daily VWAPs. So that's about what I had for today's presentation. And if it's all right with everyone, I will now transition into the webinar bundle that we've prepared for today. Basically includes everything that we talked about, the VWAP package, the zero lag oscillator, and the multi-time frame opening range, along with a couple of bonus specials as well. So for the VWAP, we've looked at the daily, weekly, monthly VWAPs, but you can also create quarterly and yearly VWAP calculations with this package. And if you're trading instruments that do not have reliable volume information, such as cryptocurrencies or Forex, you can use the range weighted average price for approximating the volume weighted average price. The zero lag oscillator also has a few additional features that I didn't get around to discuss in detail today. It has various filters, the efficiency ratio, divergence, momentum, fall off, supply demand to customize signals. As for the opening range indicator, it also plots the regular opening range, of course, a multi-time frame indicator for improved accuracy, adds a secondary minute bar series to the chart, which is used to calculate the opening range, will display the opening range correctly even if the primary bar series do not contain the necessary information for its calculation. So that's particularly relevant for volume and tick charts. For minute charts, you will want to use this indicator if the opening period is not an integer multiple of the bar period. So if you trade a 3-minute chart and your opening period is 10 minutes, that will be relevant. And finally, as a part of the promotion today, we also have a membership to our indicator library. As mentioned, this is a pretty valuable resource to fine-tune your trading toolbox with many categories: trailing stops, trend analysis, statistical indicators, volatility, you name it. And with that, you also receive a regular membership update with information on updates and new additions to the library collection. So with that, I'm going to wrap up the presentation here today. Thanks for checking in. You can get in touch with me via the contact form over at Lizard Indicators. Otherwise, drop me a line at info@lizardindicators.com. I hope this has been of value to you. Thanks again for checking in. And I look forward to seeing you in our membership section soon. Take care and Bye bye.